This weekend's newsletter went through these investor lessons that, again, as we look back, always try to look back to last year and say, hey, what worked, what didn't work. The number one lesson is to leave narratives behind. There's a lot of narratives in the markets, or for whatever reason, leave those behind. And because generally those narratives never turn out to be right. Early last year, I wrote a couple of articles because there were numerous people, Paul Tudor Jones, Stanley Druckenmiller, others that were coming out going, oh, don't want to own bonds in your portfolio. Interest rates are going to 6%, 8%, or 10%, and the debts and the deficits, it's the end of the fiat currency world, blah, blah, blah. And we warned you then, is like, be careful of those narratives because those end of the world doomsday type scenarios tend not to work out well. And last year was a really good year for bonds. In fact, on average, about every maturity of bonds returned a positive return last year. And bonds also provided a very good hedge against the volatility that we saw during the 2025 downturn, during that April Liberation Day event. So bonds did their job of providing volatility. They also provided about a 7% total return last year across the spectrum of bond holdings. So again, be careful with narratives because narratives will typically tend to push you into a direction that you don't want to be, because narratives very rarely turn out to be true. Just remember this one thing. At the end of the day, the only thing that moves price is the amount of buyers versus the amount of sellers. That's it. Narratives don't move price. Narratives are the rationalization for buyers or sellers. I'm buying this because I heard this in the media, or I'm selling this because I heard this in the media. Narratives are not analysis. Those are emotional biases that are impeding into your investment process. What you need to focus on is the actual analysis, the fundamentals, the drivers. And do those fundamentals or drivers actually have teeth? And that's why we spend a lot of time breaking down these narratives and saying, look, this narrative is fine, but the economic data doesn't support that, or the factual data doesn't support that. There was a lot of comments last year about de-dollarization and the end of fiat currencies, and the data does not support that at all. On any level does that support it. So again, it's a good narrative, makes for great headlines, great for clicks and views, but the data doesn't support it. So that will impede your returns in the future. Maybe last year it worked for you, that's fine, but it's unlikely that that will work for you in the future. So be careful. So the major lessons last year was to just kind of leave narratives in the rearview mirror and look at what is actually driving markets.
Catch me daily on The Real Investment Show. The link is in the description.